Uranium. People have been freaking out, and I just want to show you how you can stay in winning positions longer so that you don't get shaken out by day-to-day fluctuations. This candle, big red candle yesterday, all right, everyone was freaking out about it. Let me show you how you can zoom out. Look at the big picture so that you don't get shaken out. Up here in the corner is your time frames. Okay, you have all of these time frames here. How I was able to call the top on the whole market back at the end of 2021 was because the week before, around Christmas time, is I do the most analysts I ever do in throughout the whole year, because you're getting pretty much every major time frame close around that time. You're getting the yearly time frame close, the 6 monthly, the 4 monthly, the 3 monthly, the 2 monthly, the 1 monthly, the 2 week, the 1 week, the 1 day. You can see it from every time frame. Okay, that is what I want to show you. Uranium now on these time frames. We are now the 1st of December. We have 1 month to go. In 1 month's time, we will get all of that data to know how uranium will look for the next coming years, months, weeks, days, etc. So let's unpack it. 12 monthly candles. As you can see, it's been terrible. Red, 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 red. Now we have 2 green, 1 red, now a green. You can see that yearly candle has closed out. If we close where we are, let's pretend that we are closing the year now. Okay, bullish breakout above that key level. So the yearly is bullish. What this candle here is telling you is that it opened here and it closed here. That is a Murubuzu candle. That is a bullish candle. That is a sign of strength. Now let's look at the 6 monthly. Looking at the 6 monthly, what does this tell you now? Again, looking at the big picture, it was in a downtrend. And for the first time ever, it's had a higher high, a higher low, a higher high. It's changed market structure bullish. As you can see, that same level on the yearly was its resistance level on the 6 monthly. Resistance, no candle close, wick, wick, now we've broken through. So unless we get a massive sell-off in the next month, where this comes all the way back down below 22 bucks, it will be a higher high, higher low on the 6 monthly, which means you've got bullish market structure on the half yearly candles. That means you have many half yearly candles to keep going up. Let that sink in. Half yearly candles. Anything that happens between those candles is noise. Now let's show you the 4 monthly candles. Same thing. Higher high. See how shooting star wick it was being sold off into there. It came down, but now we've closed out and we're going to close above a higher high, high low, high high on the 4 monthly candles. That means every third of a year, this thing is completely bullish. Beautiful Murubuzu candles, sign of strength. Again, first time you've had a higher high, high low, higher high. That is not resistance. That is a wick. This is resistance. Zoom out, get your key levels, get out of your daily resistance zones. This is your major resistance at 22, 23 bucks. That is why when it broke that level, you've had a rocket. That there at $31 is not key resistance. 1, 2, 3, 4, 5, 6, 4 monthly candles at that point is resistance. Okay, higher high, high low, higher high. That is just a wick. Now let's go 3 monthly. Okay, now we can see we've got another level of resistance here on the 3 monthly. Notice the same thing though. Higher high, higher low, higher high, and we've closed. And as you can see, anytime it gets below this level, it's getting bought up. That is bullish market structure still. We have a higher high, higher low, higher high. Again, first time in existence. It's still bullish. This is the beginning of public participation phase. This is not a time to be scared. Now let's go into the 2 monthly candles. Again, higher high, higher low, higher high with 2 monthly candle will close above this level. Still bullish. Change your market structure on the 2 monthly for the first time. Now let's go to the 1 monthly. Same thing. See, this is the key level on the monthly, 26 bucks. Resistance, 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 we've broken through. So unless this monthly candle gets absolutely sold off and we've closed below 25 bucks, then we might have something to worry about. But until then, it is 100% still in bullish market structure. And we have a higher high, higher low, higher high on the monthly. Now let's look at the 2 weekly, fortnightly. Again, still bullish, still going higher and higher. Nothing to worry about. This is where people are starting to freak out. Look, dude, we're at resistance. No, we're not. That's not resistance. Okay, it's resistance on the short time frames. Yeah, you might get a sell-off, but it's no resistance on any larger time frames. You have nothing to worry about on the smaller time frames. Okay, get your small time frames out of your head if you're an investor. If you're an investor, you shouldn't be looking at anything below the monthly. That is the only candle you should be looking at right now. Because investor, you're looking to hold it for many months to many years. The daily fluctuations are designed to be manipulated and freak you out. So if you're getting freaked out on these little red candles, you would have been freaked out on many red candles many times and just get taken out of winning positions. Okay? So get out of your smaller time frames unless you're a trader, unless you have experience being a trader, unless you know TA and you're proven for many, many months that you're profitable trading, then yes, you can trade. But if you don't have the skill set and you don't have it and you're an investor, you need to zoom out, eliminate all of the noise and just follow the data. Remove emotions. That is all you need to do. Like you are the first phase one here, the first high, 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 low, high, high here. That is where you are. Public participation phase will come, then the excess phase will come. Then you start to distribute. Let me show you an example. CXO, everyone loved it. Everyone loved it in the excess phase when you do not buy or accumulate stocks. You buy it when the first beginning of the public participation here. Higher high, higher low, higher high on the monthly. Beginning of the public participation phase. Everyone starts to like it. Then you get the excess phase, which is where everyone is universally bullish. This is where I went bearish. This is where I was ridiculed for being bearish. But if you're looking at the bigger time frames, what can you see? $1.40 was a significant resistance. Big money was not allowing that thing to close above $1.40. Whenever it got above, sold, 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 sold. That is distribution. That is big money exiting. Shooting star, bearish engulfing, broken then the trend. We start to come down for the bear market. Back to where we started, which is what's happening. Okay, if you're going to be an investor, you need to understand the phases. You need to understand you invest either during the accumulation phase, which I wouldn't recommend because you might invest here and then your money's doing nothing for 5 years. The best place to invest is on the beginning of the public participation phase. After you've had your first higher high, higher low on the monthly, you move into your public participation phase. Then you're getting all of this and all of this. That is where your money is made. And then you exit during the distribution phase. As you can see there, very clear distribution. As I pointed out numerous times over a 1.5 year period, and again was ridiculed for doing so, that is how you know a top's in, because it is the excess phase when this market sentiment is euphoric. Okay, you need to understand the phases. You need to understand the sentiment that matches the phases. And you need to understand how to zoom out and see what is actually happening, because the daily time frame will just confuse you. Okay, here's another one, Lake Resources. Same thing, was able to get this one at the top there at $2.60, when again, everyone was universally bullish. I was ridiculed for talking about even the fact that it might retrace at this point. Again, how easy is it to identify the different phases? Accumulation phase, right there. Your first higher high, higher low, that is the beginning of the public participation phase. You get your public participation phase, right here, public participation phase. Then you move into your excess phase. Excess phase with a perfect textbook blow off top, shooting star reversal pattern. You all wanted to buy it there above $2 when it was literally a textbook reversal pattern as I'd shown here. And then even on this pullback here, everyone was like, buy the dip. There's no sign that it's going to reverse there as well. For every push, you're going to get a retracement. Now, what has it done? Bear market, it's retraced the whole move. Okay. You know, these things aren't made up. They play out time and time and time again, over and over and over again, because that is how markets work. But where did you want to buy? You wanted to buy on the first higher high, higher low on the monthly when it closed above. Okay, you've changed market structure on the larger time frame. That is bullish. That is where you're in the first beginning of the public participation. You could have bought there at 40 cents. You know, you could have multiple account over the many months just by following that strategy. Okay, so just be careful. Make sure you're identifying where you are in the phase and make sure you're not buying in this excess phase. Okay, the best place to buy during accumulation. So best place to buy is not during the accumulation. It's during the phase one after it's broken through to the very beginning of that point there. Okay, higher high, higher low, higher high when you've first shown. Because accumulation can go on for years and years and years. You don't want your money being dead money doing nothing. To me, that's just as bad as money that's going down. Okay, it's not making you money. You need your money working for you. You need your money in an uptrend. That happens when you get the first breakout. All right, and then look for the 3 phases and then see when it changes. Here's another example, Woodside Energy. Okay, let's again unpack the phases. Accumulation phase. Okay, public participation phase. And then you can see the excess phase. Excess phase. What comes after that? Bear market. Bear market. Okay, so again, where did you want to buy? On the first high, high, higher low setup here. Okay, and then know that when you get into your excess phase and then you start the trend back down, you're getting back out again. Okay, so identify where you're on the phase, because I guarantee when Woodside was up here and it was trending like that, no one would have thought that it was then going to go sideways to down for the next 10 years, 15 years even. Okay, it's very common. So identify where you're on the phase. It can really, really, really make or break your investing opportunities. I hope this helped, guys. If you liked the video, like and subscribe and give me a comment on what you would like me to talk about next time. Take care, everyone.